Hey, what's up guys? Hope you're all having a great day today. Welcome back to another video. My name is Frank Mularcik, and in this video I'm going to be taking a look at Nokia stock, doing a little bit of stock analysis, and we're going to be taking a look at some of the financials and their quarterly reports. They just released earnings as of today, as I'm recording this, which is Thursday, October 29th. So this is going to be a new series I'm doing, which is just going to be a analysis of all the companies in my portfolio, and I'm going to work from my smallest equity up to the largest equity. So Nokia is the company in my portfolio with the smallest equity, so I'm starting out with that one. Before we get started, I just wanted to remind you to like the video and subscribe if you haven't already. If you are subscribed, I want to thank you so much for showing your support by subscribing and watching the videos. As you can probably see, a week or two ago, I passed 100 subscribers, which is a big milestone for me. It was a little bit less than 2 months, so that's awesome. And as a result, or as to show my thank you, I'm going to be doing a 100 subscriber Q&A video next weekend, next Saturday that is. So if you have any questions, leave them down in the comments below, or you could message me on Instagram at Frank Mularcik. So if you guys want to see that video, make sure to subscribe and stick around, and that video will be coming out next week. And also, talking about my Instagram, I'm going to start posting some pictures or short videos on my stories of sort of brands or products that I see throughout the day, of companies that either I invest in or I'm familiar with, companies that are publicly traded. And I'm going to be using the hashtag stocks in the wild. So if you guys want to participate as well, you can use that hashtag stocks in the wild and tag me, and I'll most likely try to repost your whatever picture or story on my story as well. So one of the first places I like to look at when I'm doing an analysis of a stock is on the company's investor relations page. So if you just type in whatever company and then investor relations, I'm sure it'll pop up quickly and you'll be able to find that. So you can just go through their website, and they have a lot of good information there, and I'll be going over some of that for Nokia as well. So as you can see, we're just going to read what Nokia says they do. Nokia is a global technology company headquartered in Espoo, Finland, offering a comprehensive portfolio of networking equipment, software, services, and licensing opportunities. We are a public limited liability company listed on the Nasdaq Helsinki, Euronext Paris, and New York Stock Exchange. So that's just a little bit about Nokia, and you can see Nokia just announced its Q3 earnings on the 29th of October, which is today. So we're going to look at that presentation right now. So this is the investor presentation from quarter 3. So this is their CEO, Pekka Lundmark. He's actually new as of the beginning of the third quarter. So I think as of July 1st, 2020, he started as CEO. So they just go through in the presentation about some things. So as you can see, their net sales here for Q3 of 2020 are about down 7% year over year. And then they have some stuff about profit. Year over year, the operating profit is up 2%, and their operating margin is up 80 basis points. And then they just list some key metrics here. So in Q3 2020, currently they have 7.6 billion euros of cash and current cash equivalents, essentially. And they added around 100 million since Q2, and around 1.6 billion since the end of 2019. And then currently they have their net cash is 1.9 billion, and they added 300 million since Q2 and around 100 million since last year. And then they break it down into their different segments. So mobile access, you can see their net sales were down about 13%, but they are doing some good stuff with 5G, and I think we'll talk about that a little bit later. Then Nokia Enterprise, their net sales are up 14% year over year, so that's good to see. Double-digit sales growth, as I said, and they apparently got 83 new customers, which is good as well. Their Nokia software division, they were down 14% year over year for net sales, which isn't good, but they said that orders remain strong. And then their IP routing segment, they're down 3% year over year, but they did say it was one of the best third quarters. Maybe, I don't know if this trend is typical of a typical year or if it's down because of the pandemic, but in that case, it looks like normally the third quarter isn't the best quarter, but I don't know if that's a trend that happens every year or not. But they do say they have a strong pipeline, which is good to see, and just some of their orders were impacted by the coronavirus. The optical network segment, 19% year-over-year growth in net sales, which is really good, and their profitability is about breaking even in this category, which isn't super great, but that's what it is, I guess. And then fixed access, down 3% year-over-year, but they said there's a regional shift underway, and I think they're taking advantage of that, so that's good. And then Nokia Technologies segment, they're down 8% year-over-year, and their profit is down 7% year-over-year. And they said they had lower brand licensing due to the coronavirus, but this demonstrates their strength of patent portfolio, including 5G. So I think they're saying that even though they had some royalties that were decreasing because of the coronavirus, they're still going to be able to keep strong in this segment moving forward as the virus passes because of their 5G presence. So they also provided some strategic updates as well. With the new CEO, they're kind of making some changes and consolidating their segments. So we saw earlier there was a lot of different segments that they were looking at, and they're sort of consolidating that down to just 4 segments. So they talk a little bit about that and their just changes they're making in like management and how everything's structured. And their strategic drivers, they said technology leadership is number 1 priority, then that's kind of goes in with 5G, and they see a longer opportunity for network as a service, which I think is also talking about 5G there. So then they list some goals, which is good. They want to improve accountability, improve transparency. They want to increase simplicity and cost efficiency. Those are all good things for business, obviously. And then they list off the 4 new segments here, which are mobile networks, IP and fixed networks, cloud and network services, and Nokia Technologies. And then they're talking about how their operating model is set up. So they want the customer experience portion to dabble in all 4 of those segments and make sure that the customers are basically doing well and are happy in all 4 of those segments. So that's kind of what they're showing as their operating model here, I guess. And then it looks like the CFO, Marco Birin, also made some remarks. And he talked about the net cash. So they saw an increase from last quarter in net cash, free cash flow of 319 million euros. And he talked about the liquidity, which has been increasing recently. So right now they're sitting on 1.9 billion euros of net cash, and the total cash is 7.6. So that's just some of the things they talked about in the presentation. I did skip over some parts, but I just wanted to look at some of those metrics and some of what they were saying and their strategies moving forward and such like that. Okay, so they're also releasing these fact sheets, which are just little 1-page things with a bunch of different metrics on them. So for the third quarter, the CEO basically says, as our solid Q3 results demonstrate, we are making good progress in many parts of our business. Profitability was up on a year-over-year basis. We had the 5th consecutive quarter of solid free cash flow. Nokia Enterprise maintained its double-digit growth, and we continue to strengthen the competitiveness and cost position of our mobile radio products. So that all sounds like good progress forward. They had net sales of 5.3 billion euros, which was down a little bit from Q3 2019, but that's all right because some of that they said was affected by the pandemic. Gross margins was 37%, which is actually a little bit better than Q3, and their operating margins were 9.2%, which is a little bit better than Q3 2019 as well. And then their EPS was 5 cents, and it was the estimated from analysts was around 7 cents, so they did lose out on that, and the stock actually took a hit a little bit. And their net cash, like we said, is 1.9 billion, which is higher than at the end of the year last year. And their total cash is 7.6 billion, which is also higher than at the end of last year. So looking at net sales here by region, they have this nice little pie chart. You can see that Europe and North America are the largest segments, and both of those were up a slight bit year over year, but overall their total sales were down about 3% year over year. And then by segment, this is the one thing that's a bit concerning. You can see that the vast majority of their revenue or sales comes from their network segment, which makes up about $4 billion out of the $5 billion of their revenue, so that's 78%. And then same with for the customer type, that's communication and service providers, that makes up 82%. So it is a little bit concerning to see that so much of their revenue comes from one segment, but at the same time, that is their sort of bread and butter, so that's what they've been doing for a while, so you would expect that to be the most of their sales. And then talking about 5G a little bit, they've been getting into the 5G space, and that's originally why I bought the company back in probably January, just because I was hearing about their stuff with 5G, and I looked into them a little bit. I definitely wasn't the most educated investor at the time, but wasn't too terrible of a buy. So you can see they have 101 commercial 5G deals currently, and then I have the Q2 fact sheet pulled up as well, and you can see in Q2 at the end they had 83, so they gained about 19 over the course of Q3, and then at the end of Q2 they had 32 live 5G networks, and currently they have 36, so they gained 4 more this quarter. And then these 3 numbers right here are the operating margins for their different segments. So you can see their operating margins for networks were way up, which is really good because, as we saw here, their networks were the majority of their net sales. And then the software operating margins were down significantly, and then the technologies operating margins were up a tad bit. And then their net sales for the enterprise segment was 19% year over year. Another thing to look at with the 5G is their conversion rate, which is basically the percentage of customers that they have contracts with or deals with for 4G that they're able to convert over to 5G as well. That's about 90% of those, which is pretty good, I think. So looking at my Nokia position here in my Fidelity account, I currently have 3 shares, and I actually just bought a share today because their earnings, as I said before, their EPS was 5 cents, and it was estimated or expected to be 7 cents, so that was missed expectations. And so they were down a whopping 17% today. Currently it's after market close, but at one point during the day they were down almost a lot closer to 20%, or maybe even over 20%, I forget. But I bought in today around 3.30, I think, so that lowered my average cost significantly. So I definitely don't really think that Nokia is going to have any massive growth in the next maybe year, just because they're still kind of recovering from the pandemic a little bit. But I think they have some good potential in the future, and I think in the next few years they could really do some things and go places. But I really originally invested in them because of their 5G potential, and I also invested in another 5G player, Ericsson from Sweden, but I actually have sold out of them probably a couple months ago. But when I bought Nokia, it was back in January. It was probably one of the only companies I still have from back then. But I really didn't know much about investing back then, so I certainly don't think I looked at their financials at all. I just heard they might be a good 5G play, and that was good enough for me, I think. But right now, I'm happy with my position. I did buy, as I said, another share today, so I'm definitely think it's going to be a good investment, but at the same time, it's definitely speculative, and who knows what's going to happen with it. So it's only around 1% of my portfolio, and so if that goes to 0, oh well, but it's pretty speculative. It definitely is. I'll be the first to admit that. I think it's good to have a little bit of speculation and just higher risk in a smaller quantity in your portfolio. I'm also thinking about starting a more growth-focused portfolio with M1 Finance because I think it's just easier to separate the growth from the dividends in your portfolios. So I want to do a growth portfolio with M1 Finance if I do start it, just because usually growth companies are a lot more volatile. With M1 Finance, it's really easy to just dollar cost average like every week or every day and not have to worry about the ups and downs and the emotions associated with it. So for a long-term growth portfolio, I think that's a really good platform. And so if you guys want to see me do that, just let me know in the comments and I can do that and start a portfolio there and show you my progress with that as well. So as always, this is not financial advice. If you are interested in potentially buying Nokia, I would definitely encourage you to do a lot more research. Look at the income statements, look at the financial reports and the 10K reports that they release every year. Look at the balance sheets. Those are all important things to look at and consider the financial health of the company. And also, you need to understand their business model and how they're making their money. So that's important as well. The quote of the video is, when an investor focuses on short-term investments, he or she is observing the variability of the portfolio, not the returns. In short, being fooled by randomness. And this was said by Nassim Nicholas Taleb, and he's a Lebanese-American essayist, a scholar, a statistician. He was also into options trading at one time. And so a lot of his work revolves around randomness and probability. So he's certainly qualified to say this. And I think it's a good point because in the short term, it's definitely probably true that a lot of the stock market variability and volatility is just random, and there's really nothing you can do to predict or anticipate that. So in the short term, it's really hard for you to actually do a good job of receiving good returns. But in the long term, it is that burden is on you, and it is your responsibility, and you can be the one in control in the long term. That's going to be it for today's video. Remember that next week is going to be the Q&A video, so if you do have any questions, make sure to drop them in the comments or DM me on Instagram. I will try to get to as many as possible, depending on how many they are, but we'll see what happens when we get there. Thanks.